This is how I start a normal trading day, not chart scanning, not immediately searching for setup. I review my journal of what I already did, because if I don't understand my data, I don't know what's working and what's not. The first thing I do is sync my trades. My exchange is already connected, so trades just come in automatically. Spot or futures, everything lands here. If the last sync was a while ago, I just hit manual sync and instantly yesterday's trades are ready. No missing fills, no guessing. This is the raw truth of my trading. Now I go straight to the dashboard. This is where I validate that my process is working. I see my net profit, green, solid. Then my eyes go straight to the profit factor. 1.53. That's clean. That tells me I'm making enough to stay profitable, even if I have big losses from time to time. My win rate is 73%. Right next to it, I see my average win is solid, my average loss is quite high, but I'm achieving a higher win percentage with smaller wins. I'm profitable at the end. The equity curve is smooth, no massive drawdowns. Daily P&L isn't perfect, but it's controlled. That already tells me I don't need to trade more. I need to keep doing this. I can see my most profitable symbol here, the day of the week performance, and in the corner, my most profitable time between 10 p.m. and 6 a.m. Lately, I've been grinding the most at night. From here, I visit the daily journal page. I'm looking at August 15th. Net PL is green. Fees are a bit high. I overtraded early in the session. Profit factor for the day is 3.36. An amazing day with 80% win rate. Usually, my days aren't this great. This is one worth noting. I scroll through the trades for the day, I see their stats, and remind myself what I traded throughout the session. Here I mixed a scalping and a breakout setup. They were profitable, so the day ended well. But further down, with my news-inspired strategy, I lost some money due to FOMO, which I tagged so I can remember this crucial mistake. I started writing short daily notes, so I document it like this. $345 profit. I will write down here, scalping a few on an uptrend. Mistakes. Rush to FOMO using the news strategy. Documenting my behavior while it's still fresh is the key. It imprints in my memory. It's incredibly valuable when I return later to reflect. Next stop, the trades page. Here I see all my trades, and I've selected my current account. Sometimes I like to isolate trades across different accounts for different experiments. Daily, I go through my recently added trades. I usually filter back only a few months so I can compare the most recent stats. I scalp these trades, no need for individual reviewing. I'll mark them as reviewed. Then I bulk assign the setup and market condition tags so I can later analyze all my scalping trades together. This is where structure begins. If a key trade catches my eye, a big winner, a large loss, or a perfectly executed setup, I dive into the details, like this $150 profitable Bitcoin trade. On the chart, I instantly remember the moment, I reapply the indicators and the setup. It was a nice long squeeze breakout, tight, clear consolidation. After that, the price retested the resistance again and bounced long, securing my profit. I add the stop loss and profit target so I can track my risk. The journal recalculates everything. Planned R is 3.53, while realized R is 3.42. Beautiful. I rate the trade 5 out of 5 and mark it as reviewed. I really want to find this pattern again in the market, so I added a note. Setup was valid, let's add a few bullet points. That distinction is important. I'll revisit this note to reinforce the behavior and hopefully repeat the setup in the future. Here's something new and useful. I recently imported a batch of older trades, and I realized my existing tags weren't enough. So I go to tags and create a new category. Let's call it entry and exit. I'll add tags like early entry, late entry, optimal entry, partial exit, stop hit, take profit, trailing stop. Now let's go back to my trades and tag them. This one had late entry. This one hit take profit. And last one had optimal entry. Suddenly, trades that once felt random started telling a story, from the setup to the entry and exit, including the mistakes. I'm building context retroactively, and that's powerful. Let's review my breakout setup, one I've traded for a long time. Net P&L is green with $300 in profit. Profit factor is 5.18. Win rate is 87%. Perfect. Tight stop losses with larger take profits achieved this. The stats look solid. On average, I hold breakouts for 10 hours. The cumulative equity curve is smooth so far. I hope it continues like this. Let's also see a mistake: revenge trading. Net P&L is negative $1,000. Profit factor is almost zero. That makes sense. Emotionally trading to make back losses never works. No excuses, no stories, just data telling me, stop doing this. In the executed trades, I can also see that this mistake happens most often during momentum trades, usually while waiting for reversals. That tells me exactly where I need to stay alert. After organizing and reviewing my trades, I always pass through my reports to see the progress with the newly added trades. If any new patterns emerged in the data, or it's still the same. I always start with the overview report. I skim through the stats. If I see some irregularity or some drastic change, like here I can see I have a spectacular max win streak of 27 days. Fees look reasonable for the trade count. Expected R multiple is solid. My best month is significantly better than my worst. That's healthy. From here, daily I usually check the symbols report to see my top performing pairs before trading. Currently, Sandbox and Conflux are my top profitable pairs. This hasn't changed in weeks. I've found my rhythm. I also see a big loss on Cardano, poor risk management and over-leveraging. A good reminder. Another report I review daily is the setup report. I can visually see which of my setups are performing the best and which ones are losing my money. It tells me which setups to refine, tweak, or drop entirely. The last thing I usually check from the reports is the compare report. Before going to bed, I have many thoughts and hypotheses. Yesterday, I was thinking about my breakout trades. Am I more profitable trading just short, only long, or both? So let's compare them. Both have 4 trades so far, and both directions are pretty solid with only one loss in long. For now, I'll keep trading both until the data tells me otherwise. Before I'm done with journaling, I generally go through my notes again. I search past mistakes, read old reminders for the setups or pairs I'm planning to trade. One last thing, a huge help for confirmation. I glance at the AI forecast for the pairs I'm watching. I check the forecasted volatility, the major trend, and whether both models agree. I've noticed that when they align, confidence and accuracy increase significantly. I also look at where trading volume has been most concentrated. Those prices often act as strong support or resistance. This is what daily journaling really looks like to me. It's been very helpful. It keeps me disciplined, and seeing consistent positive returns motivates me to invest even more time into journaling. Thanks for watching.